This is probably going to be one of Tesla's, if not Tesla's, biggest quarter ever. Nothing in this video is financial or investment advice. So right now, the company is up about 2.17%. As of today, is at $454, up about $10. This is likely on news that Tesla is likely to beat the Wall Street consensus on Tesla's deliveries. Kalshi is one of the prediction markets out there that basically they try, people can bet on what's going to happen. It's like DraftKings for real life, if anybody uses DraftKings for sports. Kalshi right now has Tesla deliveries at 512,000 units for the quarter, which would make it a record for the company. If we look at the previous quarters from Tesla's deliveries, so this is looking at Tesla's quarterly report, the latest one. If we look at their last biggest quarter was Q4 of 2024, their total deliveries for that period was 495,000 total. 471 was the Model 3 and Y, and 23,000 was all other vehicles, so Cybertruck, Model S, and Model X in this case. With Kalshi's prediction, people betting on the likeliest outcome being at 512,000, which I believe is the highest yet just right now, this would mean that Tesla is about to have their biggest sales quarter ever. If we do some very basic analysis, in the fourth quarter of 24, when they did about that 495,000 vehicles, their gross margin for that period was 16% gross margin for the quarter. So basically how much money the company made, 16%. Tesla went through a lot of sales incentives to decrease the price of the vehicle so people would buy. But instead, in the third quarter of this year, Tesla has done a big campaign to make people aware that the EV tax credit is going away. So the US EV tax credit was set to go away on September 30th of this year, which it did. And that forced a lot of people to buy, not forced, but it incentivized a lot of people to buy Teslas or any electric vehicles ahead of time so that once the EV tax credit expires, they would take advantage of that $7,500 off. So Tesla didn't really have to lower any pricing. They just had to say, hey, this is going away. Buy your car now. So in theory, what this should do for the third quarter, again, not financial investment advice, the margins should be much closer to this number of 17% and even potentially higher because of how much volume the company is able to push through the factory lines to bring the cost down. So in theory, Tesla should report one of its better financial quarters in a while from an earnings perspective. Now, this is an interesting shift in tone, or it's probably going to mark an interesting shift in how people perceive the company, because for the last couple of years, the big thing was, hey, Tesla sales are down, EV sales are down, Elon Musk is going crazy. These politics are, the politics is hurting the brand. Look at all these people firebombing Tesla stores. Look at all these people firebombing Cybertrucks and all these freaking Tesla cars, right? It was just an unbelievably crazy time period. But what's fascinating to think through is that now Tesla's going to likely return to growth and likely return to generating quite a bit of money, while its biggest competitors, in this case, companies like BYD out of China, are actually experiencing some softness now in their markets. AJ did some analysis on X, so I recommend people follow AJ for some pretty detailed technical analysis in the EV market specifically. BYD is probably going to report their first year-over-year vehicle sales decrease in 5 years. So this chart shows trailing 12-month sales, and you can see that in the middle of 2025, BYD has started to experience some sort of leveling off, and they're starting to decrease in total sales. Now, this is total sales. This is not just their EV vehicles. This is their entire company. And so, of course, the big narrative push there was, hey, look at these companies. They are outgrowing Tesla. They're going way faster than Tesla. So if you're a Tesla fan or a Tesla investor, you're probably seeing a chart like this, and you're probably asking yourself, okay, so this is interesting, right? These companies are starting to slow down while Tesla has already slowed down, but now it's picking it back up, from a sales perspective, from a deliveries perspective. What probably happened here is that for the last year or two, BYD has been selling through their dealership network very heavily in China, and it has been exporting a ton of cars to whatever markets could buy them at super low costs, while they were being subsidized by the Chinese government to push all that metal, all those cars through their channels so that they can boost their sales. And now they're at a point where their cars are overflowing everywhere. There's a lot of reports coming out that BYD is having a tough time paying its suppliers They have something like 200 days on, backlogged in paying their suppliers what they need to actually build the cars. And of course, these Chinese companies are heavily subsidized by the government to make their cars because it's in China's best interest to have other countries buy their products they're manufacturing. So things like cars and whatever else they make. So now we're seeing this decline in BYD, while we're seeing an increase in companies like Tesla. Now, of course, more quarters have to come through for us to solidify this trend, but it is fascinating to see how this has sort of changed now, where now the leader, Tesla, went through this couple-year period of, beating it down, and now it seems like it's starting to rise from the ashes a little bit. It seems like we'll see what happens here in the fourth quarter. What's going to be interesting about the fourth quarter is that now with the EV tax credit gone, the $7,500 tax credit, Tesla's going to have to go and figure out how to get demand continuing for its products into next year. And the only way to do this really is by giving a lot of price incentives or figuring out how to go down market. What's interesting about the fourth quarter for Tesla is that this is when their more affordable vehicles are supposed to come out. And so, of course, one would think that they would release an affordable vehicle once the quarter's over, and they did exactly the opposite. What did they do? They released a more expensive model. They released the Model Y Performance, which looks pretty good. I'm not gonna lie, I like that stance. It's pretty nice. And if you go in and check out the pricing, so this car starts at $57,499 for the Performance all-wheel drive, which is that performance model that was up front there, 306 miles of range, 155 top speed, 3.30 to 60, which is about, I think, 0.3 seconds, 0.4 seconds faster than the old Performance Model Y, which is what I have. I have a Performance Model Y as well as a Cybertruck. But $57,500 is probably going to be a very competitive price for this vehicle. The lease pricing for these vehicles, there's no lease for the Performance yet, but they start at $529 for the Model Y. And then I'm sure they'll come out with lease pricing for the Performance at some point here soon. Now, to combat those higher prices that Tesla is going to inevitably suffer from, and of course other EV makers as well in the United States with the EV tax credit being gone, is that Tesla has now tried to introduce some credits, some lease credits for the Model Y specifically and the Model 3. So this is from Sawyer Merritt, a great account on X. I highly recommend you go check them out to follow Tesla, the Musk industry, AI, EVs, stuff like that. Tesla has increased lease pricing for the Model Y and Model 3 in the US by up to 11%, but Tesla has also introduced a $6,500 lease credit to help offset the loss of the EV credit. Quote, monthly lease payments already include the $6,500 Tesla lease credit, which is subject to change or end at any time. Order does not guarantee eligibility. So basically, this price right here that we looked at, this $529, is going to include that lease savings. If we look at the Model 3, let's say, so if we go back to the home page and we go to vehicles and Model 3, let's see what the Model 3 is at. I gotta say, their website looks pretty damn good. They've done a really good job redesigning this thing. $429, so it's $429 per month for Model 3. Again, this no longer is going to be qualified for the EV tax credit, so the price is the price. Now, I think for the company to really take the next step here, they really are going to have to figure out how to come out with a more affordable model. They've been talking about this more affordable model for a long time, really since the end of last year. And it's looking like it's probably going to be a stripped down Model 3 or a stripped down Model Y. Basically similar to what they did with the Cybertruck, what they're trying to go down market. And now with the Model 3 and the Model Y, they're going to have an easier time doing that if they go with the stripped down models, because when people think about Model 3 and Model Y, they don't really think about it as potentially a work vehicle or like, something you can use to like build stuff or carry stuff. It's a people hauler. And so if you reduce the price for the people haulers for the Model 3 and the Model Ys, and you make it easier for people to get into it, and say you make cloth seats and maybe the materials are not as nice, and perhaps you figure out other ways to reduce the cost, you'll be able to get a bigger customer base now that you don't have the EV tax credit. And I really do wonder if Tesla's strategy with these cheaper vehicles probably going to be released here in the next couple of days. My gut tells me they'll probably announce it tomorrow, maybe, like a 25% chance that might happen. If not, then probably by the quarter's release, which will be later this month, once they actually have the call and they go through the numbers of how the last quarter went. And my guess is with that vehicle, they'll probably try to sell it at cost. So right now, the vehicles that Tesla sells on their website, they're making money on them, some form of money. But I think with the cheaper vehicles, they'll probably sell it at cost. So let's say it's, $8,000 cheaper than their lowest model today, even $10,000 cheaper, let's say. They're probably not going to make any money on that. And they're going to hope to make money on the back end by selling features like FSD, like their self-driving suite. Tesla and Elon Musk have been hyping up V14, which is the next generation self-driving software from the company. And this software, supposedly, it's going to be an unsupervised version of self-driving. Right now, you have to pay attention. All Tesla owners rave about the capability and the performance of V13, which is the current version. It performs extremely well for the Model 3 and Model Y vehicles in most situations. But V14 should take it up another level. Elon Musk has said it's as big of a jump as it's ever had since Tesla started doing the FSD updates, the latest FSD updates. And so what this could mean is that now Tesla's going to be able to say, hey, buy this Tesla for, I don't know, $35,000, $34,000, whatever it is. No EV tax credit or nothing. Pay $300 a month, $350 a month just to get the car. Oh, and by the way, if you want a car to drive you around without you having to pay attention, maybe give us an extra $250. Maybe give us an extra $300, right? Whatever the number is. And that's how Tesla will make profit on the back end, because that revenue is going to be recurring until, for the life of the vehicle. So over the span of, let's say, a year, they can make an additional $4,000 or $3,000 or even $2,500 on the car. But over time, it could be, over 5 years, that's, what's the math? That's like $12,000, $15,000 in just pure profit from the software sale. And so now Tesla transitions from being this like true only automaker to a hardware company that sells you software in the form of self-driving. That's what my gut tells me is going to happen here. And then while that is going through, Tesla's going to continue ramping up their Cybercab, which is this vehicle here that has been hyped by Tesla many times, the sort of self-driving, no steering wheel and pedal vehicle that they unveiled not too long ago. This is what the interior is going to look like here. My goodness, this is terrible formatting. Here we go. This is what the interior would look like. It would have absolutely no steering wheels or pedals, but there is some limitations in being able to sell these cars right now because, of course, they're not really approved to be sold in most areas in the world. And so they're going to be vastly limited by regulations until they can figure out how to get the regulations to catch up. So until then, they'll probably just sell the more downstrip models. So super fascinating time for Tesla. I'll be covering the deliveries and the production release tomorrow once they come out and give my thoughts on that, of course. And then we'll also cover the earnings report once that's out here in the next couple weeks. And if you're a Tesla investor who's been following the Tesla story closely, this is, of course, a huge moment for the company. And if you're somebody who's had at least $2 million in Tesla stock and are looking to partner with an investment firm that can help you reach your financial goals, I've partnered with Rebellionaire to sponsor this video. Rebellionaire is an investment firm that is run by Matt Smith and Bradford Ferguson. If you're a Tesla investor and follow the YouTube space, you probably know exactly who those folks are. But they have this investment firm where they help Tesla investors reach their financial goals by employing tactics on Tesla investors' existing positions to maximize returns. And so they will employ tactics like covered calls, adding and trimming, things like that. Matt and Bradford spend a lot of time analyzing the company, analyzing adjacent industries, going all in the sort of FSD stack, the AI stack, the energy stack, really understanding what these technologies are going to do long term. And so that helps them really build a foundation to help execute these strategies. And so the experience you'll get by partnering with Rebellionaire is that you won't get this sort of cold shoulder approach or this, you're crazy for having this much Tesla stock in your portfolio, you should sell some. Instead, with Rebellionaire, they'll understand fully where you're coming from because they understand and have conviction behind the Tesla story and the Musk economy and the Musk industry as much as any other Tesla retail investor. But instead of having an investing partner that doesn't really understand the thesis, instead you'll have a partner that fully understands your thesis and they'll try their absolute best to help you reach your financial goals. And so if that's interesting to you, go to rebellionaire.com/Farzad, rebellionaire.com/Farzad. I'll have links for that in the description and the comment section below. And that's how they'll know that I sent you. Thank you so much for watching. I hope this was informative and helpful, and we'll see you in the next one. Take it easy, everybody. Bye-bye.